I thought we might just talk a little bit about some of the financial planning concerns that you see, not only for college athletes themselves, but for their parents, for their families as people are going into it. When you or one of our colleagues is talking to either a young athlete on our entertainment and sports side or to a family with a kid who's going on to college athletics, what is sort of a basic starting point? Where are you going to check in first with them?
Just that they realize that some of this money is taxable, that these kids are going to have tax compliance. It's not just, oh, they're, in college and they're playing sports and, just going about their everyday business as if they did the same thing when they were in high school. Even if you're not doing an NIL or revenue sharing, you're still, some part of your athletic scholarship itself is going to be taxable. There's a difference in what's qualified expenses for scholarship versus what's qualified expenses for 529 plans. So I think that may be a disconnect for people, right? 529 plans cover room and board at the cost of the college. Even if you live off campus, they cover the cost of what you would have paid if you lived on campus. Scholarships, if they are only qualified expenses for scholarships, only cover tuition, and then there's some fees and stuff, but they don't cover room and board.
Right.
So I think that is something that people don't realize. And then people also get NIL money or have in the past, and they're like, oh, I used it for room and board. So they think it's not taxable, whereas all NIL money is taxable.
Okay. So if you're getting taxable money in, is that a thing that people will generally need to pay estimated payments for quarterly, or is it a thing to sort of deal with at the end of the year, like you would with a W-2?
They should, at certain dollar amounts, pay an estimated taxes, right? If you're having income and you're not having any withholding on it, which you're not having on scholarships or NIL money, you're going to have to pay an estimated taxes. Of course, if it's small and you're going to be underneath the threshold in which that's required, you would not have to. But if you're making any kind of significant money through revenue sharing or NIL deals, you're going to have to make estimated tax payments or be subject to estimated tax underpayment penalties and interest.